Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. There has been much volatile right across the globe in terms of currencies and equities and commodities, with the US dollar surging to a fresh 20-year high of 114.41 as recession worries continues to give the markets pretty much a very jittery and also whipsaw price action. The Australian dollar fell to multi-year lows on Monday to a 64.85 and still remains somewhat heavy. In light of the pattern though, I feel that there could be a little bit more to the downside, but to trade these markets at this kind of volatile session for fresh trades, I would actually sit out for the moment because it's just too whipsawed. We're seeing big ranges and ones that we haven't seen for quite a while. And therefore, I would feel that the market may actually take another challenge to the downside, seeing 64.80 as a key level. A break beneath there would give further scope to the downside, maybe towards 63 cents as a potential target. But do keep an eye on that level, as if we do see that, then we could see a rebound off there due to the oversold conditions. But I have pointed out that these levels are still probably much keeping me neutral. But I would say for those that wish to trade, we could see a little bit more weakness from 64.80 break. The euro was very whipsaw price action and it's crushed the objective of 96.40. And from that has now put a very much mixed weak play into today's session. We are extremely oversold, but the bearish trend is holding from the ADX. As I mentioned, I'm probably going to be sitting out for this one too, as it's too whipsawed. The objective has been reached to the downside, like the Australian dollar at 64.80. And I always feel that when most objectives have been reached, it's time to sit out, take profit maybe, and reassess the whole picture, due to the fact is that we have seen very whipsaw price actions, and especially to the sterling today. So in light of the pattern reached at 96.40 or around that sort of 40.80 area, I'd rather be neutral in the short term. As the market heads back for the top side for dollar yen, no doubt the Bank of Japan is eyeing monetary levels and therefore could see another rejection or an intervention from around or above 145, and that would send the market plummeting again, possibly back to the bottom side now of 139.5, in case the Bank of Japan is heavier in buying yen and selling the US dollar. Well, in the last 2 days, the market has been very, very volatile for sterling. And one of the factors that triggered off is there's been much talk about whether the UK's financial position after the significant tax cuts were announced like last week. Nevertheless, the market has plummeted to multi-year lows of around 1972, I believe, and therefore has put the market very much extremely oversold. Now, with the downside crushed at 111, which was my call, I've been sitting out since then, and therefore I'd rather see how the market plays into the start of this week, especially when the European session opens. Gold reaches its objective of 1,638 to 40 or 35 to 42, and also left me neutral. But for those trading, we have broken the level, as I say, 35, reaching a low of 26. And at present, we're oversold, but there's still room, probably down to about 1,600 to reassess. Oil crushed levels of 81 and also 78, and now exposes a region of $71 a barrel. We are oversold. Now, my call at 78 has left me sort of neutral due to the fact that I believe that we are heading into a very whipsaw price action, so therefore could see further downside risk. Now we've taken out 78, but I'm not sure whether it's going to be tradable because the price is probably very, very whipsawed and very hard to trade. So do be aware, volatile session right across the board for these markets does bring a high risk, so keep that in mind. That wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the week.